Hi, folks. This is Mark Weissy of Maple Capital Partners, and we're going to use today's video to talk about something I've been recently really intrigued by, which is the Puerto Rico short-term rental market. For those who know me, have been following this newsletter, I have traditionally covered different aspects of the multifamily market on the mainland, particularly out of state, and that's usually the way that these newsletters go. Covering some aspect of multifamily, the business, the market, my outlook for multifamily, that kind of thing. But of late, I've become particularly intrigued with short-term rentals, being that the multifamily market is super competitive right now. There are a number of factors that's made it really difficult to find deals that make sense on paper. And so as a result of that, I've started to look at other asset classes. I'm, a curious investor, so trying to see what others are out there doing right now. I'm working on a development of a short-term rental myself in the Poconos, PA. Gonzalo, my partner, is working on multifamily development. So we're trying out a few other aspects of real estate, and I thought as an extension of that, maybe I could marry a couple of my interests, which are real estate and travel, and learn a little bit more about Puerto Rican short-term rental market. And so we're going to dive into what I've found so far. Hopefully it's of interest to you. I think there are some aspects of this particular segment of the short-term rental market that is investing on the island of Puerto Rico that make it kind of unique. So I'm going to go ahead and dive into some of those aspects right now. So first of all, why Puerto Rico? So I'm going to go into some of the aspects that make Puerto Rico, the island, particularly attractive. First of all, there are many, many daily nonstop flights from the mainland to Puerto Rico. They leave out of a lot of the major hubs on the East Coast, which is where I'm based. And from my airports, my local airports in the New York City area, we're talking about a short 3.5, sometimes a 3-hour flight to San Juan. There are also direct flights from other international destinations like Panama, London, Frankfurt, Germany, Spain, among others. So it's pretty easy to get to. And then the other thing is that they use the US currency, being that it is a territory of the United States. They're using the same currency as us, the dollar, as well as a lot of the same federal laws. So property protections, things like that, where you don't have to worry about a change in regime or change in administration politically, potentially putting your ownership at risk, like in some other Latin American countries. Also, and this is a big one, there's a shortage of short-term rentals and hotel rooms on the island. We're going to dive into some figures that back this up, but suffice it to say that the government is looking to support and heavily incentivize the growth in the short-term rental market in order to meet the demand that they're hoping to create in the next 5 years. Also, 95% of the island is an opportunity zone. I've actually seen this figure be a little bit higher depending on what source. There's basically only a very small portion of the island in San Juan that is not an opportunity zone. And for anybody that's not familiar with opportunity zones, basically opportunity zones incentivize, from a tax standpoint, development in certain areas. So if you find a property that needs a lot of work, or if you find a potential ground up development, and you're able to hold on to that for a little bit, you're not going to be subject to, or you could be deferring your capital gains on those. Now, I am not a tax accountant or an attorney for that matter, so you're going to want to consult your professionals on that side of things, but that goes to say that the entire island offers some opportunities for folks who are a little bit more long-term minded as far as real estate goes. And then that's just scratching the surface in terms of the number of tax incentives that are available, both for entrepreneurs and specifically for real estate investors. They're all encompassed in this Act 60, which was formerly the Act 20 and Act 22. We're going to go into a couple of the aspects of Act 60 that we think are particularly attractive for real estate investors on the island. So first, a little bit more about Puerto Rico. So the island itself is home to 3.2 million inhabitants. Actually, a fun fact is there are more Puerto Ricans on the mainland US than there are today on the island itself. It is a fairly diversified economy. They have a large manufacturing sector. Much of that manufacturing is pharmaceuticals due to their own tax code, and they do have a separate tax code from the US. There are a lot of incentives for IP creation, that is intellectual property, things like research and design. And so as a result of that, a lot of pharmaceutical companies for decades really have located themselves on the island. Not just pharmaceutical, also medical device companies, among other manufacturing companies on the island. At one point, it was actually the pharmaceutical capital of the world, less so today. There's also a lot of finance, insurance, and real estate industries on the island. Some technology companies, including some Amazon outposts, government and education is a big employer on the island. And then the last one, which is the sector that the government is trying to grow more, is tourism. There's also an increasing attention from the mainland, or at least an awareness from the mainland since the pandemic. So during the pandemic, for folks who remember, we were locked down. Travel was extremely restricted. You really couldn't travel to many places. But Puerto Rico, being that it is a territory of the U.S., you don't need a visa, was one of those places. And so as a result, a lot of people went there to get out of, winter, or just get to a tropical, a little bit different of a environment than they might have been cooped up inside their house in. Because of that, there's a lot more awareness today than just a short 5 years ago before the pandemic. So now the interesting part. So we covered why Puerto Rico is an interesting place of capital in real estate. Now we're going to cover specifically in short-term rentals. Why short-term rentals in Puerto Rico? So first of all, tourism today is less than 10% of the GDP, but it is expected to surpass 10% and employ over 100,000 people on the island. So clearly it's growing. Although when you compare that to other Caribbean peers of Puerto Rico, like Aruba, Bahamas, the U.S. Virgin Islands, Jamaica, Barbados, it's still well below the percentage that tourism makes up of those islands. And so as a result of that, the government in Puerto Rico really wants to grow that sector. Since 2021, so since pretty much you could say the onset of the pandemic, the island has surpassed historical records pretty much every single year in terms of bookings, highest number of events, as well as visitors each year. So lodging revenues just in the last year have gone up 24%, and lodging unit nights are up 13% year over year. So this is not only an area that's growing, but the government has plans in place to grow it even further. Now, when we take a look at where Puerto Rico stands relative to a peer that we kind of think of as another tropical destination, which is Hawaii for mainland Americans. Now, when we look at some of these stats, the main takeaways from here is the fact that, again, tourism is a relatively small percentage, about a third of the same in Hawaii, and it's a under-resourced sector of the island. So when you compare the number of visitors to the number of hotel rooms, in Hawaii, it's 175 visitors per hotel room, whereas in Puerto Rico, it's much higher, 250 visitors per hotel room. So what does that mean? That there's a lot lower vacancy rate, and there are a lot less hotels or short-term rental options for visitors on the island relative to what we consider to be the nearest peer to the island. Also, it's cheaper. When you compare the average daily cost in Hawaii to Puerto Rico, we're talking about nearly 80% less on an average across the island there. And then also when you're looking to purchase, it's drastically lower. And also, as investors, we're thinking about what does the purchase look like? When you compare the cost to buy housing or a apartment or whatever you're looking to buy on the island relative to Hawaii, we're talking about 2 times less in the city center. And it's nearly 3 times less outside of the city center. So not only are you getting more visitors there per hotel room, also it is cheaper for the visitors to stay there, and it is much, much cheaper to actually buy real estate on the island of Puerto Rico compared to Hawaii. So this is the part that's really sexy. It's the tax credits. So tax credits on the island, as I mentioned, are one of the incentives that the government has in place in order to spur development on the island. So our plan is to, if we acquire an asset there, is to apply for these credits. And there are a number of different eligible projects that will allow you to apply for these credits. Boutique hotel, bed and breakfast, guest house is not listed there. But basically, anything revolving around hospitality will allow you to apply for these. And these tax credits amount to a pretty large amount of money. So the way they calculate them is they take the purchase price of the property itself, they take the capex, that is the construction costs that it takes to bring them up to the point where you can start to accommodate dead guests, and you take the first years of operating expenses, and you sum all those numbers together, and then you take 40% of that, and that will be your tax credit. So for example, if you bought a place for $500,000, you put $300,000 into it in terms of construction, and your first year took $200,000 of expenses to operate it, your all-in cost would be $1 million, and the government of Puerto Rico would go ahead and if you're approved for this tax credit, which would be likely in this case, that you would be approved for 40% of that, so $400,000 in tax credits. So what are tax credits? Tax credits basically go to help corporations on the island avoid paying taxes. So while we may not use them as real estate investors, you have the ability to sell those to manufacturing companies or any other corporation on the island. For example, you could sell $400,000 worth of tax credits to a Pfizer, for example, on the island at 90 to 95 cents on the dollar. So at 90 cents on the dollar, that means that on that $1 million project, you're getting $360,000 back just for simply providing housing. Now, the way I think about this is that that massive amount is going to incentivize you to develop there, obviously. But for you as the investor, that could be all of your equity in the deal. As we know from the multifamily world, generally we are into a deal for around 30 to 40% of the purchase price. So we're talking about 30 to 40% of the all-in cost. This is almost like doing a refi, a cash out refi, getting all of your initial money back, and you still own the asset. And by the way, you still can do a refi with a bank because it's a tax credit that you're getting back. So just tremendous amount of incentive there that the government's offering you. This is an example using the same numbers that I just mentioned here. Again, $360K on $1 million invested is just massive. As near I can tell, they don't offer this anywhere else in terms of the mainland US, this kind of tax incentive. So there is a lot of development that could potentially be done because of this tax incentive. Also, another incentive that's in place is as a hospitality developer, you get 75% exemption on your property taxes for the life of your hold of that asset. So, property taxes on the island are already pretty low compared to the mainland, but take that number and, basically cut it into a quarter, and that's what your property taxes is owed should you be approved for these incentives. This is more information on the benefit of the tax credit, some real numbers on it. So in the example that we just laid out, basically the difference from having the tax credit to not having the tax credit in place, you could say investing on the mainland, is you're talking about a 16% cash on cash return on the mainland turned into a over 28% cash on cash return in Puerto Rico with those tax credits. So you can see obviously it's just a massive upside. And that's not counting, we haven't looked at this on an IRR basis, which is even more attractive because you're getting those cash flows up front. You're getting those tax credits up front, the first 3 years of ownership. And so this has the ability to generate 82% higher on a cash on cash basis for an investment. So this is why basically we are looking at Puerto Rico because of these incentives. Now, there are a number of risks. I'm not going to go into all of them that are unique to Puerto Rico, to the island. It is a Caribbean island, so things move slower there. Labor is an issue. Definitely don't want to gloss over that. We're also investing in short-term rentals, which overall is more subject to the business cycle, right? When there's a recession, usually there's less discretionary spending. People tend to go on vacations less, so that will definitely hit the short-term rental market at large, and specifically the short-term rental market within the Caribbean. Capital and real estate market. So the island itself is kind of its own world in the sense of the capital markets. There is not as deep of a capital market on the island, so getting financing for these types of projects is very difficult. So that is something that a potential investment would have to contend with. But we're doing everything we can to learn about who are the right lenders, who's lending in this space, as well as every day there are a lot of new lenders coming to the island because of some of these incentives, because of the interest on the island. This is a little bit about what we're looking for in our investments in the island in terms of our investor partners. So we are looking at a few opportunities now. Again, this is not an offering of a security, but just for informational purposes, we are looking for partners on our deal when we do find one. We've got Nelson, who is our boots on the ground. We also have a couple of other local partners that would be heavily involved with the deal once we find one. And we're really looking for folks who believe in the story of Puerto Rico, understand the power of these tax incentives I just laid out and want to learn more. So this is my contact information. Feel free to reach out if you want to chop it up about Puerto Rico, about what I find so interesting about the island, other than the financial aspect of it. It is a beautiful place to live, and there's just a certain way of life there that's, I see why it is a vacation destination. So if anybody wants to talk more about, this and, kind of allow me to download some of the information I've learned over the last 6 to 12 months in my studies of the island of short-term rentals, I'd be happy to talk about this stuff. Also, if you're currently doing short-term rentals on the mainland or really anywhere for that matter, would love to talk. We're currently in talks with a number of other operators that could potentially partner on this type of opportunity. So always looking to learn more about different asset classes, and stay tuned. We've got more to come for sure on that end. So we'll sign off as we always do at Maple Capital Partners. Be kind, be charitable, and invest wisely, folks. Thank you.